Next, let's see question number 3. R, S and M are partners sharing profit and losses in the ratio of 2:2:1. Their balance sheet as on 31st/12/2021 is as follows. Capital R 20,000, S 8,000, M 4,000. Reserve fund 10,000. Creditors 8,000. Total of the liability side is 50,000. Cash 10,000. Sundry debtors 8,000. Stock 10,000. Fixtures 4,000. Plant 18,000. Total of the asset side is 50,000. The total of the balance sheet is 50,000. The partners decided to dissolve the business. Creditors allowed a discount of 22%. Realization expenses amounted to rupees 1,800. There was an unrecorded asset of rupees 1,000 which was taken over by S at rupees 800. The following are the amounts realized. Plant 17,000, fixtures 3,000, stock 14,000, sundry debtors 7,400. The total assets realized is 41,400. Prepare necessary accounts to close the books of firm. Here they decide to dissolve the business. Dissolution means they have an idea to close the entire business of the firm. Okay. Then the creditors are allowed a discount of 2%. Creditors are allowing 2% discount to the firm. Realization expenses is 1,800. There was an unrecorded asset of rupees 1,000. There was an asset in the firm, but it is not in the book. That is unrecorded asset, which was taken over by S at rupees 800. Yes, a partner, he takes over the assets which is not mentioned in the balance sheet. Worth of rupees 800 was taken over by S at rupees 800. They realized the assets, a plant 17,000, fixtures 3,000, stock 14,000, sundry debtors 7,400. You are asked to prepare necessary accounts to close the books of the firm. What they are doing under the dissolution, they are closing all the accounts of the firm. Let's see how to close the accounts. Workings. Profit sharing ratio between partner is 2:2:1. Unrecorded asset worth rupees 1,000 was taken over by S at rupees 800. Assets realized is 41,400. Creditors settled 8,000. Creditors are allowing discount, 2% discount. So 2% of 800 is 8,000 is 160. So 8,000 minus 160 is 7,840. Realization expenses is 1,800. These are the information that is given in the book. With the help of these information, you have to close the books of the account. First, we have to prepare realization account. Under the realization account, first we have to transfer the assets at book value. Okay, to debtors, to stock, to fixtures, to plant and machinery. So assets, book value of the assets should be transferred to realization account. Okay, realization account debtor to debtors, realization account debtors to debtors account, to stock account, to fixtures account, to P&L plant and machinery account. 8,000, 10,000, 4,000, 18,000. We have transferred the assets at book value. Then next we have to transfer the liabilities account, creditors account debtor to realization, that is 8,000. Third step is they realize the assets at rupees 41,400. So by bank, assets realized is 41,400. Here they settle after realizing the assets, they settle the creditors at rupees 7,840. Actual value of creditor is 8,000. They have to settle 8,000, but they are allowing 2% discount and they are settled at rupees 7,840. Then they have to bear the expenses, realization expenses at rupees 1,800. Then yes has taken over the assets, unrecorded assets. So yes, capital account should be debited to the extent of 800. So by yes capital account, unrecorded assets taken over by yes 800. Though the credit side of the realization account is 50,200. The debit side of the realization account is 49,640. So the difference is 560. that 560 is the realization profit. Okay, that should be distributed between partners in the ratio of 2:2:1. So 560 into 2 by 5 is 224 rupees. 560 into 2 by 5 is 224 rupees. 560 into 1 by 5 is 112 rupees. So the realization profit credited to R's capital rupees 224. 224 rupees is credited to S capital account and 112 rupees is credited to M capital account. Next step, we have to prepare capital account of R, S and M. This is the balance. R balance is 20,000, S balance is 8,000, M balance is 4,000. Then S has taken over the assets. No, for that his capital account is debited to realization. Here as unrecorded assets taken over by S at rupees 800. Okay, 800 should be debited to S capital account. Then by reserve, reserve is 10,000 rupees. So 10,000 rupees, this is the profit. Okay, the profit should be transferred. The accumulated profit, reserve is nothing but accumulated profit. Accumulated profit should be transferred to partners capital account in the profit sharing ratio. So R account is credited 4,000, S account is credited 4,000, M account is credited 2,000. Then realization profit should be transferred to partners capital account. R capital account is credited 224. S capital account is credited 224. M capital account is credited 112. So the total of credit side of the capital account is 24,224, 12,224, 6,112. Okay. So with the help of this, we can find out the amount that is to be settled to partners. Or capital account balance is 24,224. Yes, capital account, the firm has to give 12,224, but he has taken over the assets worth rupees 800. That has to be deducted. So firm has to settle 11,434 rupees to yes. Then M has to be settled 6,112. They are settling the partner's capital account. R capital account debtor to bank. R is given 24,224. S is settled 11,434. M is settled 6,112. In this style, we have to prepare the capital account of R, S and M. Then we have to prepare bank account. Balance in the bank is 10,000 rupees. Then realization. Assets realized is 41,400. Totally, the firm has 51,400 rupees. First, it settled creditors. Creditors are paid 7,840. Then they met realization expenses, that is 1,800. Then they settled the partners' capital amount. R's capital is 24,224. S capital is 11,424. M capital is 6,112. Okay. So the total of the bank account is 51,400. Both the sides are tallied. In the realization account, bank account should be tallied. If it is not tallied, then somewhere we have committed a mistake. Okay, like this we have to prepare the accounts under the dissolution. Next we will see question number 4. P and Q are equal partners. They decide to dissolve the partnership on 31st/12/2019 when their balance sheet stood as follows. Capital P 24,000, Q 24,000, creditors 1,200, machinery 9,600, building 30,000, stock 3,480, debtors 2,880, bank 3,240. Total of the balance sheet is 49,200 rupees. Additional information. P is to take over the business and pay rupees 6,000 for goodwill which had not been previously valued. He is also to take over the building stock at book value and machinery at rupees 9,000. During the period up to 31,520, P collects rupees 2,400 from the firm's debtors and pays the liabilities, getting rupees 120 as cash discount. P also pays dissolution expenses amounting to rupees 240. Prepare realization account, partners capital account and bank account, assuming that the settlement was made on 31st 5/20, 2020. Okay, so here there are two partners. One partner's name is P. He is interested to take over the business of the firm. Okay, the two partners, that is P and Q, are decided to dissolve the partnership firm, but P is interested to take over the business of the firm. So he pays 6,000 for goodwill which had not been previously valued. So it is not in the book, but they valued, and he pays, that is P pays 6,000 rupees for goodwill. He is also take over the building, stock at book value and machinery. So he takes over the business means he takes both the assets as well as the liability. He takes over the assets and settles the liabilities. Okay. So he takes over the building and stock at book value, machinery at rupees 9,000. He collects 2,400 rupees from the debtors and pays the liabilities, getting 120 rupees as cash discount. He also met the expenses rupees 240. These are the information that is given in the problem. You are asked to prepare realization account, partners capital account, bank account, assuming that the settlement was made on 31st 5/2020. Let's do. This is the workings. P takes over the business, that is both liabilities and assets of the business. The value of the assets which he took are as follows. Goodwill 6,000 rupees, stock book value 3,480, machinery 9,000 rupees, building 30,000, collection from debtors 2,400. So the assets, value of assets which he has taken over is 48,480. Dissolution expenses he met rupees 240. He settled the creditors. He gets cash discount of 120. The total value of creditor is 1,200. From 1,200, if we deduct 120, we will get 1,080. These are the information. Let's do the realization account. First, we transfer the assets. Machinery 9,600, building 30,000, stock 3,480, debtors 2,880. Then we transfer the liability, creditors 1,200. Then the assets are taken over by P. The value of the assets which is taken over by P, goodwill is not in the book, but they have valued, and P paid 6,000 rupees. Machinery 9,000 rupees, building 30,000 rupees, stock 3,480. He collected from debtors rupees 2,400. Then he met the expenses of 240 and settled the creditors as 1,080. So the total of the credit side is 52,080. If we deduct, we will get if we deduct 52,080, the 9,600, 30,000, 3,480, 2,880, 240 and 1,080. The difference amount is 4,800. That is nothing but the realization profit. That should be transferred to P and S capital account. They are equal partners, and so 4,800 should be distributed to P is 2,400 and Q is 2,400. Next, capital account. Balance of P is 24,000, Q is also 24,000. Realization profit. They are equal partners, and so we share the profit 2,400 and 2,400. Then creditor settlement. P is settling the creditors, and so his capital account should be credited, that is 1,080. He has taken over the assets. P has taken over the assets worth rupees 48,480 that has to be debited. Then he collected cash from debtor is 2,400, that also has to be debited from his capital account. Then here he made the realization expenses to the extent of 240, that has to be credited to his capital account. then the capital account, debit side of the capital account of P is, that is 24,000, 2,400, 1,080, 240 is 27,720. The debit side, he has taken over the assets worth of 48,480 and he has collected money from debtors 2,400. The debit side of the P's capital account is 50,880, and so the difference is 23,160. That means he has to bring 23,160 cash to the firm. Okay. Then we will see the Q's account. Q's account total is 26,400 rupees. The firm has to settle, P has to settle 26,400 rupees to Q. Okay. So, this is the way to prepare capital account. Here, P has to bring cash rupees 23,160 and Q has to be settled 26,400 rupees. The last step is a bank account. Balance is 240. P's capital account, bank account debtor to P's capital account is 23,160. Q's capital account, bank account is 26,400. The total of the bank is bank account is 26,400. In this way, we have to deal with dissolution account. We have to prepare realization account. Second, we have to prepare capital account of the partners. Third, we have to prepare bank account, and that bank account should be tallied. Question number 6. Vignesh and Ganesh were equal partners. The ratio is 1:1. Equal partner means they share profit and losses equally in a manufacturing business. On 30th/6/2020, they dissolved the firm, on which date their balance sheet was as follows. This is the balance sheet. Creditors 84,000 less provision for discount 3,000. Net amount is 81,000. Reserve for contingencies 15,000. Mrs. Ganesh loan 30,000. Reserve fund 45,000. Vignesh loan 24,000. Vignesh capital account 63,000. Ganesh capital account 54,000. Then asset side, cash at bank 7,500. Debtors 1,26,000 less provision 6,000. So outer column 1,20,000. Stock 96,000. Furniture 10,500. Plant and machinery 75,000. Prepaid expenses 3,000. So the total of balance sheet is 3,12,000. Stock, debtors, plant and machinery, goodwill realized 81,000, 1,14,000, 75,000, 15,000 respectively. Furniture did not realize any value. An amount of rupees 18,000 was paid on account of contingent liabilities. The expenses of realization was rupees 3,000. The firm had previously made some investment in shares of a joint stock company and had written off this investment on finding it useless. The investment is now realized rupees 4,500. Show the realization and partners capital account. Let's see how to prepare realization and capital account of the partners. What are the information that are given in the problem? Partners name Vignesh and Ganesh. Profit sharing ratio 1:1. Date of dissolution 30/6/2020. Assets realized. They realized stock 81,000, debtors 1,14,000, plant and machinery 60,000, goodwill 15,000. Total of the assets realized is 2,70,000. Previously, they considered the investment as useless. Now it is realized 4,500. Shares, investment in shares, that realized 4,500. Liabilities discharged. Contingent liabilities discharged 18,000. Creditors are settled 84,000. Mrs. Ganesh loan settled at rupees 30,000. The expenses of dissolution 3,000. So the total of the liability settlement is 1,32,000. Let's prepare realization account. First step, we have to transfer all the assets to the realization account at book value. So do debtors 1,26,000, stock 96,000, furniture 10,500, plant and machinery 75,000, prepaid expenses 3,000. Then creditor we transfer the liability. So debtors we have to transfer only the gross amount. Okay, the provision for debtors will go to the opposite side. Okay, the provision for debtor is 6,000. Creditor we transferred 84,000. This is liability, and Mrs. Ganesh loan is 30,000. Creditors discount should be written under the debit side. Provision for discount on creditors 3,000. We should write here only the gross amount. Okay, in both the cases, debtors as well as creditors, we have to write only the, we have to consider only the gross amount. The provision should go to the opposite side. Okay, debtors provision will come here, creditors provision will go here. Okay, then assets realized how much? Already we have calculated the total, that is 2,70,000. Then investment realized 4,500. Creditors settled 84,000. Realization expenses 3,000. Contingent liability, there was on contingent liability, that also has to be settled, that is 18,000. Ganesh loan, Mrs. Ganesh loan 30,000. If nothing is given, we have to assume that it is settled as it is. Okay, the Mrs. Ganesh loan stands at 30,000, so 30,000 we have to give, the firm has to give. Okay, so first we transfer the assets, then we transfer the liabilities, then we realize the assets and investment, and then we settle the creditors. The firm meets the realization expenses as well as the contingent liability and Mrs. Ganesh loan. Now we have to find out whether the realization account produces a profit or loss. Total. The total of the debit side is 4,48,500. Okay, 4,48,500. But the debit side total is 3 lakh. Credit side total is 3,94,500. So this is debit side total. This is 4,48,500. This is credit side total 3,94,500. The difference is 54,000. If we add 6,000 plus 84,000 plus 30,000 plus 2,70,000 plus 4,500, we will get 3,94,500. From 4,48,500, if we reduce 3,94,500, we will get 54,000 rupees. This is the difference amount. So in this case, the realization account net result is loss. This loss has to be transferred to capital account of the partners. 54,000 is the total loss. The partners are following the 1:1 ratio. Okay. So it has to be transferred to Vignesh 27,000 rupees, Ganesh 27,000 rupees. The next step we have to prepare capital account. Balance is 63,000 rupees, 54,000 rupees. Realization loss we have to transfer, that is 27,000 rupees, 27,000 rupees. Then reserve fund. The total reserve 45,000. So that has to be transferred. Accumulated profit and accumulated losses should be transferred to partners capital account. So 45,000 rupees is the reserve fund. 1:1 ratio. So 22,500 should be credited to Vignesh capital and 22,500 should be credited to Ganesh capital. So by reserve fund 22,500, 22,500. Like that, reserve for contingencies. Reserve for contingencies is 15,000 rupees. That should be distributed between Vignesh and Ganesh in the ratio of 1:1. So Vignesh capital account should be credited to 7,500 rupees. Ganesh capital account should be credited 7,500 rupees. So reserve for contingencies, that is also an accumulated profit. So that should be transferred 7,500, 7,500. So the total of Vignesh capital account is 93,000. Ganesh capital account is 84,000. So 93,000, 93,000, this is the total. From that total, already the Vignesh and Ganesh has to bear the realization loss, and so we have to deduct the 27,000. So the bank Vignesh capital account is settled 66,000 rupees by way of giving 66. His balance is 66,000. That means the firm due is 66,000 rupees to Vignesh, and it's settled. Ganesh due, the firm due towards Ganesh is 57,000 rupees. It's settled Ganesh by way of giving cash 57,000 rupees. This is the way to prepare the capital account. Then bank account, balance 7,500. Assets realized 2,70,000. Realization, investment realized 4,500. The total amount in the firm is 2,82,000. Let's see how they are going to settle the creditors as well as the expenses. First, creditors settled 84,000. Then expenses of realization is 3,000. Then realization contingent liability is settled, that is 18,000. Mrs. Ganesh loan is settled, that is 30,000. Then Vignesh loan is settled, that is 24,000. Vignesh is settled at rupees 66,000. Ganesh is settled at rupees 57,000 rupees. So the total of the bank account is 2,82,000. The bank account is tallied. Okay. Hope you understand the problem. Thank you very much.